Welcome back, everybody, to Keys and Gears. I'm Mark. I'm a local Texas mortgage broker. I'm here with Bess, a Texas real estate pro. Together, we have like 40 years of experience. Can you believe that? Oh my gosh.
Been a minute.
Been a minute. So a couple of days ago, we did a segment on when is the right time to buy a house. So if you haven't watched that one, go back and find that one. We get that question a lot. Is it the right time to buy? When is the best time to buy?
Now a great time to buy.
So there's also there's that side of it, but there's also a side of, am I prepared to buy a house? Am I ready to buy a house?
Well, what exactly does it take?
And what does it
to
take,
be able
right?
to buy?
What is the process and all those things? So let's dive into that. So the first question is what we answered in the first segment of this podcast, is that we wanted to, we want to make sure that you're emotionally ready to purchase that home. Now let's talk about the technical side of it. Is it, are you ready financially to buy a house? And, financially speaking, you got to check three things. You got to check your credit, you got to check your income, and you got to check your bank balance. Those are the three things that tell you you're financially ready. So the first one is you got to make sure you pull your credit report. You can do that once a year for free. And you go into that credit report and you make sure that you don't have any derogatory things on your credit. That means that your credit score has dropped because you missed a payment on something, or you have a collections account you didn't know about. By the way, sidebar, AT&T is notorious for this. If you didn't return your equipment to AT&T, your credit score probably dropped by 100 points. So return that equipment to AT&T ASAP.
And keep the receipt.
And keep a receipt. So that
somehow AT&T doesn't.
Oh my gosh, they are notorious. I can't tell you how often I have to deal with this, and they're notorious about not answering their phone either.
And this
so
is
good
not a
luck.
hot sports opinion. This is
reality.
Fact.
This is a fact. So
AT&T, just saying. Okay.
the credit. The reason I bring up credit first is because that takes the longest time to clear up. Okay.
And what is the usual credit cycle? Just bring us all up to speed.
Usually 30 days is the shortest.
Okay.
Now, when you clean up your credit, you can do a recheck of it. It just costs a lot of money to do.
Okay.
And so if you have time, you might as well prepare your credit. Not to mention the fact that the higher your credit score is, the better your rate's going to be. So why wouldn't you go into your credit report and make it even better? Even if you don't have anything on there, make it an 800 instead of a 750. How do you get to that? I can help you with that. Reach out to me. We can talk about all of that. So credit is one thing that you need to look at. By the way, if you have a collections account on there, one mistake people often make is if it's an old collection, like 3 years or longer, don't mess with it. Because if you do mess with it, it starts that clock all over again. And then your score goes down even more. So be very careful what you do. Talk to somebody like me or a true credit repair person, not some charlatan out there that's on TikTok telling you they know how to fix credit. They usually don't. Again, come to a professional like me. I'll refer you to another professional. That's the sidebar on credit. So that takes the longest. Your income, you want to keep your job, right? So if you're in the process of pre-approval of trying to get a mortgage, of buying a house, don't make any job changes, please.
You've waited this long.
Yes.
Wait until you have that key before you go change career or job or anything.
I recently had a customer who I guess didn't remember our conversation about that. But I know the realtor had a conversation with him, and I did too. And sure enough, like 10 days before closing, he said, "Oh, I changed jobs." So that brought everything to a halt immediately. You have to understand the lender is giving you a lot of money to buy a house. Okay. They're not going to part with that money unless they're sure that you can pay them back. And without a job or a job change, they're going to be very leery, to say the least. So the underwriter's job of a lender's underwriter's job is to be a detective, to uncover anything that could be a red flag.
They're looking for a reason
not to give
you money. They're not ever. They are a business, not a charity.
That's right.
They're not looking to just hand it to you and never talk to you again.
And take your word for it.
Right? if I may,
yes.
insert the real estate
Right.
boots on the ground side of it, because we do work complementary.
Yes.
So while Mark is talking about these technical things, this is a Bessism explanation of what we're trying to accomplish here in this financial process, in the finance process. Number one, what's the mindset? The mindset is you are going to be getting financially naked in front of someone you will never meet. Okay, that's a boots on the ground. This is how it is. Best truthism. Oh, look at me making up all sorts of things. Okay,
No, it's...
no, this is not made up, and that is you will feel like you're getting naked financially in front of someone. There will be no dollar tucked into your panty. No, you're just gonna do it.
It's going to feel invasive.
It's gonna feel there you go. There's the fancy way of saying it. Okay. Secondly, it is simultaneously going to give you flashbacks to when you applied for college or any other major trade school, whatever else. And that was, remember, what was the whole point, POV of that college application? And that was, pick me.
Yeah.
All right. How did you do that? You had a squeaky clean.
Yeah. You presented yourself in the best light possible.
Right? Because, why? Because these pieces of paper, now in this day and age, this video, had to invoke trust and excitement in a college acceptance officer. Suddenly that big word has suddenly escaped my brain, but you know what I'm saying. Admissions officer.
Yeah,
it has to invoke confidence into the admissions officer that out of the only 1,000 spaces of freshman applications that they can accept, out of the 10,000 applications they receive, they can only accept 1,000 freshmen, that you are worth being one of those coveted 1,000 freshman spots. That is the mindset you need to have as you go through this financial loan process. And that's what I'm sharing with my people, right? Is you want to keep that application look as squeaky clean and beautiful and sexy as possible. Why? Because there's so many benefits. Not only do you get the loan, but you get it at a really great rate, better than your neighbor that goes out and parties every weekend.
Very important.
All these things, right? And the other part of that sexy clean application is making your bank account as boring as possible. Mark mentioned bank statements. You're going to get ready to talk about.
We'll get to that, but let's finish up on the income part.
Okay.
The other thing is, do you have opportunities to make more money? Okay. So are there job advancements coming up? Are they coming down the road? A lot of times I counsel people to wait, and because they're looking at a price point that's probably not very feasible.
All right.
And they do have a promotion coming up.
Or like an end of the year bonus or something.
Right.
Or
no, more
bonus?
like a promotion that's an ongoing increase in their income. And that allows them to go to the next level in a house. Okay. So that's a case where emotionally they're ready to buy a house and would love to buy a house, but financially they're better off just waiting a second and
just tapping the brakes.
Tap the brakes. And then I get the question of the interest rate and all that. And I said, there's no way to time the market. Just, it is what it is. But I want you to make the right move, because buying a house is expensive and you don't want to do it haphazardly. So the income also determines what's called your debt to income ratio. And that's why I bring this up, is if you have opportunities to make more money in the future, then maybe it's time to wait, because your debt to income ratio goes down. Debt to income ratio is a simple calculation. It's all your minimum debt payments divided by your gross income. Not your net income, but what's showing as your gross income.
Is that the DTI that we hear talked about on YouTube and other things?
That's kind of the technical term, debt to income.
Debt to income.
DTI. But you can, so that DTI has to fall into some brackets. Okay, there's some brackets that are 50%. You can apply 50% of your gross income towards debts. And that includes, by the way, your new house payment. So it has to fit into that 50% mark. It's better to be in the 40% mark than to 50% mark. It's better to be lower the better.
Two different debt gears.
Right.
Maybe tying that in. No, go ahead.
Exactly. So two different second gear versus fourth gear.
Ooh, even better.
Anyway, so the income is super important. don't make changes. If you are making changes, make positive changes. If you're making changes, job changes, ideally they need to be in the same industry.
Like lateral.
Yeah, I mean, they don't go from an accountant to a car salesman. It's not going to work out for you. Okay, it needs to be in the
But
same.
accountant to CPA, or you're a CPA now, you're a manager within the same firm.
Right, or you're in another firm that's an accounting firm. It's okay. That's fine. Right, but if you're making drastic changes, the underwriter's going to say, "Well, you have no experience in this. How do we know you don't get fired in 6 months from now?" And on the underwriter's fiduciary duty, I'm going to use a big word, fiduciary duty. That means their loyalty, their legal responsibility is to protect the lender, the
Legal
actual
responsibility.
bank. Their legal responsibility is to protect them, because guess what? The actual underwriter is going to be in trouble if they approve a loan that then goes to foreclosure, because they didn't do the homework. They didn't do the detective work. Back to Bess's point, it's going to feel very invasive, but it's not. Okay, so it's not personal, it's business.
And and along those lines, the feedback I get is, oh my gosh, Mark and his team just asked me for the same exact document for the third or fourth time.
Right.
When documents get kicked back, when they get asked for multiple times, so I'm like clean and clear.
Correct.
The date was smudged when it went through and got faxed, or
Right.
I just did a throwback word, faxed. It got forwarded or printed out for the third, fourth, fifth time, and so that's sometimes the case.
The format of the document that they've sent us 3 times before, they didn't listen to us, and we tell them this is the format we need it in. And if they send it in any other format, it's not going to work. We can't take a screenshot on your phone as a official document. It just doesn't work that way.
So I would urge you, don't take it personally if that happens. Just listen to exactly what's required. And please do not, I have a mindset of Mark and his team are like coming, or any of your lenders are coming after you. They're not. They're trying to set you up for best success with that college admissions officer.
Correct.
And the college admissions officer has to follow a federal mandated, and or depending on the type of loan, and or a person who's going to write the check, mandated list of items that must be fulfilled before they can write that check.
That's right.
So it has nothing to do with you, unless, of course, your listening ears are turned off and you do not hear that Mark needs it in this particular, or any of your lenders need it in a particular format. That's what's going on.
And you know, the third part of the pre-approval process of getting ready is your bank account. And your bank account, by that I mean, where's the money coming from? It could come from all kinds of different things. It could be a family gift. An immediate family member can give you unlimited amounts of money as a gift. And by the way, there's no tax burden. We can talk about that another time.
Well, time out. I thought it was up to $11 million.
It is.
Okay.
That's the mistake people make, is they think of
up to $11 million they can give you. Just
the yearly bucket is much smaller of the gift that you can give, but your lifetime bucket of gift giving is $11 million. Not many people will reach that, so don't worry about the tax implications. Is bottom line. If you're pulling money out of a 401k, for example, there's a way to have a loan against yourself, against your 401k. A lot of people use that for down payment and closing
without
costs.
too much of a tax hit.
No, not at all. You're paying yourself
that's great.
back. So it's a great way to do it. If you pay yourself back. If you don't pay yourself back in that 401k, then that's not a good idea, right? If you're moving money from the mattress to the bank, that's going to be a little bit of a problem. Because the underwriter has to look at where's that money coming, what's the paper trail? Because legally they have to flag something that is not traceable, and it comes into the money laundering laws and things like that.
Words from 1980.
That's right. That's right. So where are you pulling this money from? Is it your mattress money? Are you Walter White? Are you I don't know what's going on here. The underwriter's going to ask questions.
Watch the series Narcos. Pretty good. Goes into details.
Narcos
as
is
to
good
why
too.
Our
Yeah.
housing rules are the way they are.
Right.
There you go. There's
Right.
a make-ready assignment. Go watch Narcos.
Yeah.
Now you got to see where you got to fulfill all these federal mandates. Okay.
And Bess has brought it up before. Is like the make your bank account as squeaky clean as possible.
Boring.
So what I typically suggest is you move the money 60 days before you actually get ready to buy a house. You move that money into your least active account, and it just sits there. Okay. Now, if you're pulling money out of investments, it's different. You got to do that last minute. There's just more paperwork involved, and that's the only reason why I suggest that to people is to move it into an account that has very little activity. That way, the underwriter doesn't have to look at a bunch of transactions and figure out where's that money going,
Think of it
what's
as
going on.
seasoning it. You're seasoning the money.
That's right.
By putting
That's a
it
technical
where...
term, actually. Yeah, yeah.
Oh, look at
Yeah,
me.
that's I know you've been
Okay.
listening. Yes.
I just like to cook, and I guess I like to cook money too. I don't know. I didn't realize that.
That's exactly what it's. That's what we call it. We call it seasoning.
Yeah.
So
What's especially important on a side note,
Yeah.
and I mention this because in Texas, this is a fact, and that is this year and last year, the most new home first time buyers have an internet. They're new to Texas internationally.
yeah. Oh yeah.
Those are our number one new home buyers, our international buyers. And so that's where seasoning comes in too, is that many international buyers come in and they're going to pay cash, but the money has to be in the United States of America for a while.
It has to be traceable.
Before
It
you
has
can
to be
use it.
traceable. You can't just go to the Cayman Islands, come back with a suitcase full of money.
Right.
Ain't gonna work.
Well, and also if your parents have moved on to that house in Italy that they always threatened that they were going to run to if you didn't
Right.
behave in college or high school or whatever, and they've gone ahead and done it now, and and you're going to buy a house, and they're going to help you.
And they're
That
moving
money
money
needs
back.
to go from Italy back to the U.S. before it can actually
It
help
gets
you.
convoluted. Is the bottom line. So let's talk about a story, for example, that ties all three together. I had this couple who came referred from a realtor. The realtor said, "I'm really not comfortable showing them houses. I know you can relate without getting pre-approved by you." And I said, "Thank you. Let me reach out to them." Kept calling them, kept talking to them. They kept saying, "We're great, we're fine. Don't worry about it. Don't worry about it. We own 3 businesses." They both drove, she drove a Rolls Royce and he drove like a Porsche or something, a Ferrari. I don't know what they were. But the realtor was like, they seem like they're fine. Well, guess what? They found a house, made an offer, and then I get a 911 phone call on a Friday night at 8:30 p.m. that they need a pre-approval letter without having done any of the work.
So they ignored you. They had
Ignored-
not sent in any part of their college application,
Right.
and now they're like,
They just said,
We want acceptance now.
take my word for it. And I kept saying to the realtor, I don't know. In my experience as a realtor and now as a mortgage broker, I'm with you. I don't like doing this. This is not okay. And sure enough, I pulled their credit. He has a 590 credit score, and her credit score is 615. So guess what? They didn't qualify.
so it's all style, no substance.
The reason is a lot of self-employed people have a pretty low credit score because they utilize lines of credit. They utilize credit cards, lines of credit, things like that. They have a lot of outstanding open lines of credit or used lines of credit, which drop your credit score tremendously. Okay. So sure enough, they had the income to qualify. They didn't have the credit score to qualify. They had the assets to qualify. So that one little piece threw them off. They couldn't buy the house. They had to wait, and they had to wait quite a while. They had more issues than just that. But so there's an example of if you don't do the upfront work, you're going to be in trouble once you fall in love with the house. And the wife was literally in tears because it was like they had been looking a while, and they finally found the right house. And I was, of course, the bad guy, and I had to break it to them. It's not going to happen. I had another person who had income from a trust account. Well, come to find out it wasn't done correctly. And they were also they kept saying to me, everything's fine. Don't worry. I'll send you the documents whenever we're under contract and go to underwriting. I kept saying, I need to read these documents. Sure enough, it wasn't done right. Couldn't use the income. Guess what? They had to back out. They had already paid for inspection. They had already done.
So they were out of pocket $2,500 for just
not doing their homework.
not just sending you a document.
So don't be that person. Come to someone like me and get the homework out of the way, even if you're a year out, 6 months out, because we may need to work on your credit. We may need to work on your income.
Well, real quick, working on credit.
Yeah.
Sometimes paying off that credit card is not the way to fix the credit,
Right.
right?
Well, credit utilization is one of the highest percentage of, it's about 35% of your credit score is credit utilization, meaning if you have a $10,000 credit limit on your credit card and you used up $7,500 of that, you have a $7,500 balance, not a good idea, not good. You need to be at 30%. So you balance on a $10,000 credit line, it needs to be like $3,000 of credit that you actually have used. That will not affect your credit score. That will make it stronger. And closing credit cards and credit lines that you've had for a long time also drops your score. So you don't want to do that. So whatever credit lines you have, the best idea is to keep using them in small amounts. Okay, so if you have 10 credit cards, buy groceries on this card, buy gas on this card, pay your utilities with that, and every month they get paid off. That way there's activity in there. Your score will keep going. That's just a little tidbit of, there's more to it than that.
Bonus hack, thank
But
you. Yay.
That's a basic. A lot of people make the mistake.
And when you first told me that, for my credit cards, I have like little, on those apps that you have,
Yeah.
I've got like little alarms, and that is, I have intentionally put my personal top at 30% of what it actually is. So when it hits that, it gets chink alarm. I'm like, oh, okay.
That's a good way to do it. So, all right. So let's wrap this up. So I already told you my grind of the day was that, hey, take my word for it. I'm good for it. I can buy a house. I have a Ferrari. I'm good. Yeah. Okay. Fine. Let me see the, money talks.
Show me
bullshit.
the money. Yeah.
Yeah. Anyway, so what?
Not just a movie line. It actually is real life.
Exactly. Sometimes I feel like I want to say that. I want to send that meme, over a text message, like, show me the money. I'm sure you have too as a realtor.
Right.
So are we talking brass key or are we talking grind?
I'm going to share with you a grind I have. Not with Mark, but with some LOs, loan officers.
Yes.
When I, as a listing agent, call to verify the validity of this pre-approval letter I have received, and I ask, well, how much homework has the buyer completed? When the loan officer says, well, that's personal information, I can't tell you.
Right.
I cry foul because I did not ask. Did y'all?
Specifics.
I didn't ask for any numbers.
No. Right.
I did not ask for what's their credit score. I didn't ask for any of that. I was asking, have they forwarded to you the last 90 days of bank statements? Have they forwarded to you the last 90 days of credit card statements? Have they forwarded to you the last couple of years of W-2s if you require it? Have they forwarded to you their gift letter from their parents for the money that their parent, how much of their homework have they gotten done?
And it's a valid question. I mean, as a listing agent, your fiduciary duty, to use that word again, is to your client, the seller, to make sure that you have vetted who has made an offer on your house. So again, don't take that personally as a buyer. They want to make sure they're dealing with somebody who can actually go through with perform, right? Because they're risking another buyer who's now turned away because you have made the offer and you're under contract with that house. So that's not fair to the seller to walk in there and go, oh, I'm good for it. It doesn't work that way. And,
It's just bad manners.
I have to say, in some LO's defense, you can't give away specific information, but you can say, yes, they have handed in the document. And as a matter of fact, a professional pre-approval letter will state that. I have physically seen these items. And if it doesn't say that, it's not a pre-approval. It's just not. And as a matter of fact, there's laws around that where in Texas, you're supposed to, as a loan officer, have specifically stated what is reviewed, what has been actually vetted, instead of just saying, hey, oh yeah, they're good for it. That's a pre-qualification. That's a verbal, hey, I make this much money, my credit score is this, I have this much in the bank. That's a pre-qualification. A pre-approval means, in my case, 96% of the time in my years of mortgage brokerage, you can buy a house. The 4% come in when they change their job, lose their job, or there's some other situation that's unforeseen. and that's when the 4%, they end up not qualifying. But in my case, it's 96%. So I do underwrite the loan before you even get started buying a house, which that's the kind of person you want to work with as a mortgage, as a real estate agent, and as a buyer. So that having said that, we're at a wrap. We're already at 25 minutes here. So thanks for joining us here at Keys and Gears. Drop us a line down below, a comment. Email us if you have specific questions, keysandgears@gmail.com. You can find us on YouTube, Spotify, Apple, wherever you find podcasts. So come join us next time. We look forward to it.
We're here to help.